Hello and welcome to Crux Investor. We caught up earlier today with JP Vargas de la Vega. He's the MD at Galan Lithium, an ASX-listed lithium explorer and developer with assets in Australia and South America. We talked to him about their recent PEA on Hombre Muertos, plus they've raised some money. We talked to him about what they're going to do with that. So if you want to have thoughts and opinions on the conversation, some of the topics discussed, and indeed the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis, which you might find useful. There are summaries of other interviews that we've done just to save you some time. There are training courses to help you with your diligence process. And of course, commentary from experts from around the world on a variety of companies, commodities, and markets. That is particularly interesting. Do have a look at that. Plus, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe and friendly environment, free from trolling and abuse. If that sounds nice to you, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like. We appreciate it. Leave your comments below. We'll get back to all of you. And of course, if you want to see precisely what we talked about today, take a look in the description below. JP, how are you doing, sir?
Fantastic. Thanks.
Good. Haven't seen you since September. How have you been?
Well, quite busy since. Well, funding was one of the key questions you asked last time. We managed to get it over the line, close to 15 million in the bank. We deliver a PEA/scoping study, not far off of being a pre-feasibility study with compelling economics, $1 billion worth of NPV, and also with a very conservative lithium prices at the time. So it has been busy, but all positive from our end. We have also we have sent Brian to the labs. We are expecting result within this quarter that will drive our strategy going forward. But I'm quite busy in Australia and in Chile and Argentina. So it's been a desperate times, desperate measures, and we are still on top of it and in a much better position we were 6 months ago.
Yeah, well, that's for sure. Last year was pretty tough, except for the last 2 months of the year when the sort of lithium prices started kind of moving. You must have been relieved to just be, I say survival mode for most of the year. Must have been relieved to get to the end of the year.
Indeed. We were quite creative, and I'm really pleased with my team in Argentina and Chile. These guys are in the middle of COVID, something that we're not facing here in Australia as much as we've seen overseas, and probably you yourself there in London. But these guys were able to do what needed to be done, follow all the safety advice from the local authorities. And we deliver quite a bit.
Yeah, okay. So look, just to kind of remind people about what it is that you've got. Obviously, you've got Hombre Muerto, I think is the project where you want to talk about the PEA. So you've also got a couple of other projects. Should we just deal with those, just kind of get them out of the way?
Well, technically we have 3 projects. We have Hombre Muerto West, and the one that we deliver the scoping study /PEA. We have Candelas, which is to the southeast of Hombre Muerto West, distant probably 20-25 kilometers from Hombre Muerto West. This is within the same salt flat of Hombre Muerto. In Hombre Muerto West, we are neighboring Livent, and at Candelas, which is the other project that we have at Hombre Muerto, we are neighboring Galaxy. And recently, we have done a joint venture with Lithium Australia, and we have got 80% of the Greenbushes South project in Western Australia. The highlight of that project is that we are 3 kilometers south from the Greenbushes mine.
Okay, so let's talk about that, because I want to be able to deal with those and just park them up and focus on what you want to focus on, is on Hombre Muerto. Lithium Australia, why would they get rid of it? I mean, they're whatever they 130, 140 million market cap company. Greenbushes is a kind of big buzzword because of the IGO deal there. It's significant, and you're near them. The naming's quite good. Greenbushes South, that's quite clever. Why would they offload that to you?
Well, if you look at their portfolio, they have quite a lot on the plate, so they have plenty to divest that they can catch in and get exposed anyway. They focus a lot on technologies and patents. So I will say they're lesser of an explorer, and I think that makes sense for them to, let company like us to do the legwork for exploring.
Right. Okay. Fine. And so, what gives the terms of that deal? You've got an 80% earning potential. So, what's it look like?
No, we already have 80%.
Okay.
That's our starting point. So now we have it was all equity, so there was no cash involved, and we are done. There are free carriers until pre-feasibility, and then whatever happened after that, they could get diluted or decide to retain and participate with that 20%.
Right, but talk us about the equity. So, what level did you do that? What's it cost you really?
The equity at the time. Sorry, you catch me on that, but it was in the vicinity of $350,000 or $400,000 Australian.
Okay. And
so it was.
So what are you doing with that project? You raised a bit of money recently. You got 15 million in the bank. So how much time and effort and money are you going to be spending on that project in 2021?
2021, high level budget, probably 90% Argentina, 10% Australia.
Okay.
It's our main focus remain Argentina, and we need to approach Australia in a systematic way. We still need to finalize all the mapping, geochem and geophysics and so on before even thinking of putting a drill hole. There's a lot of data as well on Greenbushes mine itself, so we want to really understand this properly. We're not in a rush, but Australia is not going to demand much of our funds and time. Our efforts remain Argentina.
Right. Okay. Which is great. That's good to hear. You said you've inherited a lot of data. So do you know what it is that you've got? I get that it's an option and you'll park it up for now, but do you know roughly what you're looking at?
Well, we're looking at the pegmatites that are present at the Greenbushes mine. Everyone knows it's a world-class asset with the highest grade lithium in the world on a hard rock mine. And so we're trying to see if we can see, we can explore to trying to find even a small fraction of what they have. It'll be good enough for us. And the data that is there, the Greenbushes mine has been a mine that's been operating for more than 100 years. It's been a tantalum mine, tin mine, and now it's a lithium mine. So that's why we digesting a lot of data, bibliography, and trying to understand the sequence of the events and how it all happened. So by the time we finally have a big picture of what we have, then we can start calibrating that model to what potentially we could have.
Okay. So we should just park that up for now, but there's some optionality there for the future. Let's go back to South America. You've got two projects there. One sitting next door to Livent, so people again are sort of in terms of like Greenbushes, the neurology component is going to get people excited. So again, what do you know about that project?
Well, the Livent project's been operating for more than 20 years, 25 years plus. The lithium revolution for the lithium-ion batteries started at Hombre Muerto. The Sony Handycams batteries came from the lithium came from Hombre Muerto, so everything started there. More recently, the Livent sells most of the lithium that they have into Panasonic, and Panasonic makes the batteries for Tesla. Now, in terms of production, they produce around 20,000 tons of lithium carbonate equivalent a year, so that's the footprint. They have announced that they want to expand the production, and it's a known asset. For us, is fantastic because we have close to 2.3 million tons of indicated under the Australian code, the JORC 2012, sitting in our ground, and our study has shown that we potentially can come out with a similar footprint in terms of production for 40 plus years.
Right. Okay. So with regards to Candelas, how much more money are you going to be spending on that in 2021? I'm trying to work out where the focus is. Candelas for the time being has been parked, and the reason being is that we want to focus all our efforts at Hombre Muerto West. There is an optionality at many levels with Candelas. We can, if we need further water, we can extract water and process it with reverse osmosis in the ground. We have 700,000 tons of lithium carbonate equivalent at Candelas. That could be a satellite down the track to what we have. But we want to nail Hombre Muerto West first before we move into Candelas. Unless, Matt comes with a big check and says we want to develop those both at the same time. Yeah. That's possible. Always, if you say all the right things, that's very possible, JP. We have money. Like, why I'm going down this road, I just want to be able to say to people, right, the value that you're going to create is all going to come from Hombre Muertos, okay? Because the other two are parked up. They have some book value, but it's probably future value, unless the market does something crazy. So let's talk about this. You've done a PEA, some pretty good numbers in there. Do you want to talk us through that?
Yeah, $1 billion MPV. Our operating costs at around $3,500 a ton, which is one of the lowest operating costs of all the projects coming online. Very similar to what Livent has been reporting as the actual cost of production on a yearly basis, lower than the operational cost of Orocobre. And when we look at the largest lithium project that is coming online in Argentina, which comes from Lithium Australia, they are assuming to produce around 40,000 tons of lithium carbonate equivalent in the project. And the cost is slightly higher than us. Now, when we come with half the production, the economics, the scale of the economics, the scale of economics, they don't apply to us yet. So we believe that we already have a competitive advantage, and we can reduce our cost. And the reason why we have this low cost is because the premises that we've been always saying, Hombre Muerto for us is a high-grade asset with low impurities. Moving to CapEx, the CapEx is around 400 and rounded to 40 million with $100 million in contingency. So it's around 30% contingency. And this work was done and globalized with Worley, Chile. And the guys are very conservative because this is our first step. So 30% contingency is quite high, but I do understand the reasoning behind it. And with a current capex of 340, if you remove the contingency away, nevertheless, the capital intensity of our project is still very competitive to our peers in the region. So with all these economics, they are quite compelling and strong. It gives us confidence that the next steps we can do a lot more in terms of optimization.
I mean, it's a good point. The contingency being so high is the first project, obviously. If you look at people like Livent, I think they've pulled out of the agreement they had with E3 Metals, citing the fact that they needed to apply resources, capital and resources back on their own project to solve things technically, okay? And I think lithium, more so than conventional commodities like gold, silver, copper, whatever, is a technical commodity in that sense. So I think that cautiousness is warranted, and that's fine. Talk to me about the team, and talk to me about what you've brought or put in place there, because this technical component is critical, not just in terms of the extraction, but what you then do further down the line to insert yourself into the marketplace. So maybe start with the team and what they're doing for you.
Yep. The team in Argentina, we have two geologists that have been a key part in terms of getting this resource estimation done. They are local Catamarca guys, and they also shareholders of Kalana. And I think that's the key thing that has made a difference now that COVID has kicked in. There's the commitment from their end is fantastic. In Chile, I have Boris Caro, that is in charge of the study. Boris has Argentine experience managing lithium projects, previously with Orocobre. He's a mine engineer. He's a Chilean Australian as well, and he's it's good to have a guy that knows the markets, understands Argentina, and can deliver the studies. Because he was dealing directly with Worley in Chile, because he lives in Santiago. So when he needs to, all the engineering that was done, Boris knew exactly what to do. So we're a very small team, and we get all the support on top of that from a board member, which is Daniel Jimenez. Daniel was the senior vice president of commercial for SQM for 10 plus years. He worked for 28 years in SQM. So, and pretty much that's our team. We don't have that many more people. We have ad hoc people that work part-time here and there, but I'm myself here pushing things from Australia.
Right. I mean, that's the bit that interests me. Daniel Jimenez, because the commercialization is what you're currently going through the process of exploration and moving into development, and you'll kind of work your way through the various studies. I know you've said this is a pre-feasibility level PEA, but PEAs have a value, and I think that's contributed to recent move in share price in this positive environment. So that's really good. But people like Daniel are the guys that are going to work out how do you get a strategic partner on board, how do you sell into market, how do you market, etc. So at what stage, or are you already having those sorts of conversations now that you've done your PEA to be able to insert yourself into the market?
Yeah, look, Daniel, as you point out, it's a commercial person, and he's going to look for the best solution, where to get the best value for money into what we're doing. He's busy. He has a lot on his plate, but we just want to get it right. And the market has turned, and we have seen that the interest from other parties is there. We have not talked to anyone yet, but I think that potential parties are waiting for a bit more maturity in what we're doing, but it doesn't mean that they're not paying attention to what we're doing. And we have had a couple of conversations here and there, but nothing that will take us to a next step. But from Daniel's feedback, he's telling me not to worry about what's coming next, because it's going to happen.
So when you say he's busy because he's a non-executive director. He's busy with other stuff, but at the time he feels he needs to come back in, he'll be adding value. Is that what you're saying?
Well, look, what I'm saying is Daniel has been approached by several parts, entity commercials, or he's got the connections worldwide into lithium. So they do know about Galan, and I think that he is busy just screening how far these companies want to go with us, and then when something serious happens, he'll let us know. So he's working sort of a filter in the meantime on the commercial side of things as how we're going to go next.
Okay, and then so let's come back to the technical component. You say this is these are good grades, low impurity. It's fairly conventional. Mm-hmm. You're saying, is that what you're trying to convey?
Yep. Yeah, we have a very simple approach to what we want to do, and we're using solar ponds. We're not reinventing the wheel. We are using things that we know it works. If you look closely to what Galaxy is doing, they've done a lot of work, and probably more work than what we have done. And their conclusion is solar evaporation ponds. So also that's the feedback that we always have got from Daniel, because he knows the industry and it's been there for a long time. So we respect his opinion. And from our end, and as a managing director, I just want to make sure that the money that we have is well spent. We don't want to risk it. And we're not against the new technologies, but we don't want to be the first either, because there's a lot of risk involved. Having said that, we are in discussion with 2 or 3 companies that we believe that are worthwhile keep talking further, but it's not on a direct lithium extraction solution. This is more of like a hybrid solution. So somewhere in between that, we're still using ponds, but the key thing is to increase our recovery. So the thesis is, if this works, it will be fantastic. And if it doesn't work, we're already in the first quartile of the industry under our study.
Yes.
So we're in a very strong position.
Because, yeah, absolutely. So obviously Brian's tailing ponds, very conventional process. So I'm interested in this DLE or hybrid DLE extraction, because obviously with DLE, it saves you time, time's money. So what precisely are you talking about there?
But we'll save some money by enhancing our brine, but the time component is not that bad. Not what we save the most. What we increases our production yield. So this is the key thing for DLE. Not DLE. It's a hybrid sort of solution that help us to increase our recovery. Our current recovery sits in the high 60s. So this hybrid technologies using ponds. We're not walking away from ponds. could potentially increase our production rate. So as an example, if we thinking of 20,000 tons under conventional, we could potentially come with 23, 24, 25,000 tons as a result with the same CapEx expenditure, but the same footprint, no increase in things, but we can increase our production. So that's sort of the angle that we're analyzing, and this is still early days, but we like what we're seeing because these technologies, what we like is that there is low energy consumption and low water consumption. So remember that in the middle of the Andes, and access to water and power is not readily available. What we're seeing from other companies that have engaged in direct lithium extraction is that the power requirements is significant. And one of the other things that we like about this technology is that while reinjection, that's a key thing that's been discussed. Reinjection is important because they said we're not, we're keeping the aquifer as it is. Reinjection may bring a bigger problem, and this is something that it needs to be tested. And reinjection may bring some contaminants down the aquifer. So we're not doing any of that. And from our end, we see this as a potential better solution in the middle of what people want to see.
Okay, so talk to me. Okay, so I understand. So I guess you're testing that. You'll feed back into the market how that's going and if it works and if the economics are there, right? You say that you've done this PEA to a PFS level in some or all components, right? So what do you mean by that? Because that can give a lot of comfort around the economics, to the market. So why can you make that claim?
Because look at the companies behind engineering. Worley or Worley Parsons, as it was known no longer ago, they've done the work and they were quite thorough. So it's not just John Smith Engineering, and through the feedback as well from our team as well, they quite happy with the quality of the work that's been done. So that's why we believe that we're not far off.
So when do you expect to deliver the PFS then?
Well, the key inflection point for us is the lab testing that we're doing in Chile, in Antofagasta. This has been delayed basically because the lab that we use in Antofagasta shut down at the University of Antofagasta. And now the lab that we were delivering our samples to also from January, they stopped receiving samples. So we need to send everything to Santiago, which is 1,800 kilometers south of Antofagasta. So the round trip to send the samples, get the samples, process, and everything's, every round trip it takes a long time. So what we want to do after is once we get this solution tested, we have sent approximately, from the last time we spoke, we have sent another 17,000 liters extra of brine to Chile. So we're doing several tests compared to what we did before. So we have different trains of testing that we are analyzing at this stage, and that will give us the solution as what's next. Are we going to PFS, or do we feel confident that we can go into the feasibility study? And depending on those results is the decision that we're going to make, because at some level, as I mentioned, we have a lot of strong engineering, and the next is just the chemistry. Lithium brine about chemistry, and we just want to get it right. So that is the key component. We should have results within this quarter, and then we announce what we're going to be doing next fairly soon. Okay,
and then how much will that cost you, whether it's a PFS or a feasibility study?
All up, it will be Australian dollars. Will be around 8 million.
8 million. Okay, so a big chunk of this will be going on a study, feasibility or pre-feasibility study,
or both. Yeah.
Yeah. Okay.
Yeah, and it will take us another 12 months to do it all. Give or take.
Give or take. Okay, fine. So let's come back to this positioning. The reason I said at the beginning, I want to understand how you position yourself is because if I look back at 2017, prices went crazy, equities went crazy, and then oversupply into the market. You know how it works, supply demand. Obviously, the EV thematic is driving a slightly different narrative, but at the same time, there's going to be a lot of existing producers ramping up. There's going to be a lot of new entrants into the marketplace. We're talking to a lot of lithium companies at the moment, CapEx, similar to yours, that sort of level. And conversations are happening, which is great. But strategic partners or financial partners are going to have to be quite selective. Otherwise, they're going to get caught out with pricing again, right? So when do you expect, or how do you expect to insert yourself into the marketplace, given the potential volatility of a lot of product coming into market?
Look, well, things that go for us is where we are. This infrastructure is a non-salt flat next to a producer. The last company that got into Hombre Muerto paid 280 million, which is POSCO, to get into Hombre Muerto. And we have proven that our chemistry is equal or better than what POSCO has. So that goes for us. Yes, we are probably a little bit behind compared to our peers in terms of a study. But then you got the risk of a salt flat that never produced and operate before. To date, one of the things that I'm doing in parallel is to engage financial institutions to let them know who we are, what are we doing. They don't all understand that this is early days, but imagine in another 12 months, give or take, we have the results, and then funding is the next leg. So I want to make sure that all the financial institutions are familiar to what we have, where we're going, and this is a warm-up exercise. No one's going to give you money straight away because they think that you got something good, and for the reasons I explained. But I just want to trust in the management, in what we're doing and how we're doing it before getting into production, which is our key thing that we want to be testing, getting as soon as possible. So there's a lot of conversations happening, just as an introductory theme. But this is an ongoing thing, and I've already engaged at many levels with different financial institutions. At the end of the day, not all of them will come into fruition. But look, it's there's interest, and they like the idea of what we're doing. Argentina has its own issues as well, but despite all of that, they see our neighbors, they see the strength of our project, and I think that could give us a bit of more leverage when the time comes when where they're going to put the money down the track in terms of the execution of a project.
Okay, so just remind people what it is that you're going to be producing and selling into market, and then I'll ask you the question, which is, were you or are you tempted in moving further downstream into producing a sort of higher grade product, or higher margin product to sell into the market? Because obviously hydroxide seems very popular at the moment. Battery grade lithium is what people are talking about. Are you happy where you're at?
Well, I have my question mark on the hydroxide. The reason being is because if you have seen the data coming from China, the LFP batteries that use lithium carbonate high purity, that is being the preferred material to go into the batteries. And yes, it doesn't give you the same range as lithium ion batteries, but also it's a lot cheaper to produce. That's the main thing. And secondly, safety. Don't forget that safety is a big component of this. These batteries are far less likely to catch fire. So, and at this stage, the producing lithium carbonate, it is a flexible product that has many markets we can place it. We can place it to pretty much everywhere around the world. And when things turn sour, we can produce lithium carbonate technical grade and sell it anyway. And we have the flexibility to have a high grade product that give us a low operating cost. So the key thing for Galan is to get the funding, sink the capex, and once you're in, you're there for life.
So keep it simple, get into production. It's easy.
Yeah,
mining's easy. If you think
and
about
actually,
it, it's really easy.
Yeah, and well, the chemistry is always the most difficult part. And on that note, if I can, look at solution that even is less complex than producing lithium carbonate, that's something that we also evaluating, because why Australia was so quick to turn around and produce more lithium, and the reason being is because in Australia, lithium carbonate doesn't get produced, no lithium hydroxide yet. And the large companies still struggling trying to get that out. But what they're very good at producing is lithium concentrate. And if we can sort of mimic that down the track, or that's something definitely we're evaluating, because I can get to market in half of the time, and it will take me half to a third of the capex of requirements for getting online. So all of these things are brewing in the background, and we're analyzing, and we're thinking, we're a small company. If I can avoid to be another company with another lithium carbonate solution that will take 4 or 5 years to get there, I need to put my hand up for $500 million, even though we might be $300 million or $500 million, it becomes really difficult. We've seen what Galaxy has done in the past. Has taken them a long time independently. They've been quite a few lithium booms. My theory on that is because the capex component has been quite high. So that's why they're coming into a more simple solution. And yeah, I'm learning and seeing what else is doing, and I'm looking at what Australia's doing and what it's good at. So if I can apply the same principle, why not?
Okay. JP, that's a great place to finish. That's where I wanted to get at right from the beginning, which is like you're clear about where you sit and how you come at it, and where your role is. So look, appreciate your time. We should speak more regularly. It looks like things are really starting to motor. You've got a bit of money to be able to deliver these things. So stay in touch.
Thanks very much, Matt. Look, Galan is in a very strong position today. We have one of the strongest PEA out in the market. We have so much to do in 2021, but we're not far away of finding a solution as how we're going to get to market. So watch this space. Please visit our website. My contact details are there to follow up. And I'll definitely be in touch and give you more updates as we unfolding.